Hello, everybody. Welcome to Zoe's Treasures. My name's Tracy, and here with my husband, Noel. Let's go, I Love Discounts. You're like there, ready, and waiting. I love it. Hello, everybody. Hey, Brittany. I saw you come in here. Southern Charm. Hello. East Coast Island. Y'all, tonight, we got exciting stuff to talk about. At least it's exciting to me. You know, I get all geeky about taxes. But, the better half is napping. So am I your entertainment then? That's pretty bad when you come to me for your entertainment on taxes. Hello, Tinkerbell. We are going to talk giveaways. We're going to talk about giveaways, prizes, and how to properly report those. I've got a couple of pieces of information, East Coast, hello, that may surprise you. Maybe not. Maybe you've already heard about it. But we're going to go through to make sure that you as a seller know what your responsibilities are. As a buyer, what may happen to you when you win a giveaway or some type of a prize here on Whatnot or on any other platform. But just so that we're all on the same page and we know what the rules are. Before we do that, I want to give you some updates about what's coming up, and I want to brag on another seller that's on here. So Monday, starting just in a couple of nights, Monday night, I'm going to be doing a Setting Up Your Reselling Business workshop. It's going to be for the next 4 Monday nights, 7 p.m. here on Whatnot. You don't want to miss it. You can go ahead and bookmark it. So if you are brand new, or maybe you just kind of want to be like, hey, did I do this right? Is there anything I can go back and fix? Come to that workshop on Monday nights. It's going to be really interesting. We are going to go from like the setting up from the legal aspect all the way through running your first show. So that's starting on Monday night. Tomorrow morning, everything behind me, warm embrace, all of this is going to be for sale 8 a.m. So that's going to be a good one. Dollar starts, $4.50 shipping. And then our PA meetup, y'all. You guys are so coming through. Tonight's is going to be on YouTube, same name, Zoe's Treasures. Our Monday night series, the Setting Up Your Reselling Business, will be on YouTube while the series is running. So during the month of August, it'll be there, and then we'll be pulling it down. Eventually, it will become a paid course. Good evening, Old River. PA Meetup, you guys, we only have 11 tickets. 11 tickets left. We are about sold out. We are this close to being sold out. You guys, if you have not got your PA Meetup ticket yet, they are in the bin. We only have 11 left. Once they're gone, they're gone. We only have so much space. So just so you know, that's where they're at. If you're thinking about it, don't wait too long. Don't keep banging on the fence. You want to get them while you can. And then the final thing before I talk about a seller really quick, very nicely, of course, is all of our show notes. We have started to put all of our show notes from our Friday business show and Friday tax shows into our library. So you can gain access to the library. I'm going to pin it here. It is $39. You get access to over 31 guides, PDFs, Excel sheets, and all of our show notes now. So typed out, usually 4 to 6 pages of show notes will be in there and kind of covers our shows. So you can get the show notes if you want the Cliff Note version, or you can go to YouTube and watch all the questions and answers and all of that stuff. But those are in there as part of the library. So with that, Marsha Radeville, I know we have so many great people coming. I'm so excited. I want to brag on somebody really quick here. Are you ready? He's telling me to hold before I brag on somebody. My husband ordered from another seller here, unbeknownst to me, and he surprised me with these 2 little gifts today. And they are beautiful. They are handmade art. It's a handmade artist. Can I show everybody? He's telling me to wait. I told him to be ready. Come on, mister. I gave him plenty of notice. I told him at least 30 seconds before I went live to be ready. Okay. So I got to give him another minute. I know, fired. It's no special occasion tonight. I want to brag on a seller because I just got something, and while it's fresh on my mind, I want to tell you guys all about this person. Can I please start telling them about who this is? Okay. Many of you have seen this person in my shows, the Serial Hobbyist. Maybe you already know. It's a husband and wife team. So, of course, the gift. No special occasion. He just bought it because it was cool. When you see it, you'll know why. It's cool. So the Serial Hobbyist, they husband and wife team, and they both are painters, or both are artists. And he bought me these 2 little pieces of art, and I want to show you them. Are you? No, this way it's going to show better. The top one doesn't show it good. Oh, Okay, he's making me do it this way. I don't. What do you want? Oh my goodness gracious, he's driving me insane. Okay, let's see if we can change the camera so we can see it. Maybe, maybe not. There we go. Let me hold it up. Look at this piece of art. Handmade by the Serial Hobbyist. They painted this. It's in a little frame, signed and dated, and that's the first one. Then this is my absolute favorite one. Look at this guy. Look at the detail. This is so little. It's only like maybe 3 inches, 2 inches by 2 inches maybe, or 1.5 inches. It is so tiny. It has so much detail. So they did such a good job. Y'all, I know I love the L2, and this one's signed also, signed and dated. So I just had to brag on them because I thought the detail on these was so good for something that is so little. I mean, look at you guys. It's like, they're little. They're going, I have a big gallery wall that leads down to my basement. These are going on my gallery wall. So I had to brag on them because he got that and I just thought it was totally cool. So let's talk about giveaways and prizes. And I know what you're probably thinking, hey, I do a $15 buyer giveaway at the end of the night. What's so crazy about that? It's not that it's so crazy, but is it tax deductible? That's the question. And it depends. Most of the time it is. You don't have to worry. Most of what you do is tax deductible. Oh, you are very welcome. I absolutely love them. I cannot wait to hang them up on my gallery wall. So you very, very talented. I was just in the show watching the painting going on right before my show. Okay. So let's go through on what is or isn't deductible. But first of all, I want to know how many of you run giveaways. This isn't going to be a talk about are giveaways good or bad. We're talking about the tax deductibility about them and any rules. So regardless of if we think they're great or think they're bad, do you run giveaways? And I'm going to run a giveaway right now while you guys are answering. This is for a CEO affirmation pack.
Just give me 1 second. So I want to show you. I want to show you what the Serial Hobbyist does, and this is real time. Okay, check this out.
Oh, look at that. Now we're watching somebody else's show full screen in our show. Look how tiny that is. Look at the detail. Like, this is amazes me because I can't do this.
Husband and wife duo, and they're both super talented. Look at that. Look at that picture. And it's going to come out amazing. They have such a great selection of art. It's amazing. I really like them.
Okay, so a lot of people run giveaways. Normally, giveaways are tax deductible for us. They're like a marketing expense. But let's get into maybe when that's going to be a little bit different and what does it mean to the person who receives your giveaways. The next question, how many of you drop little trinket things into buyers' boxes when you send it out? Not going through Whatnot's giveaway, just on the side, you're packing up and you put little thingies in their boxes. How many people do that? I do little tiny ducks. Well, as long as I have them in stock. This is a pretty popular thing on Whatnot. We're going to talk about those because there's some implications. That's where I think you may be surprised on some of the rules surrounding that. So the first thing is, can you deduct your giveaways? Your general giveaways, you're running $5 gift cards, CEO affirmation cards, eye masks, whatever it is that you're doing for giveaways. If they are for marketing or advertising reasons, to generate more revenue, encourage new buyers, anything like that, they're totally deductible for you. So you don't have to worry about that as far as your giveaways. You can deduct them. If it's ordinary and necessary for your business, if you gave an item away to promote your show, attract new buyers, reward loyal buyers, business purpose, you can deduct them. Marketing expense, you're good. But what about those things you put in people's packages? There's a limit to those. When you're dropping gifts into customers' or clients' boxes, you are only allowed to deduct up to $25 per person per year. That can add up really quick. So think about what you're putting in there. What's the average value of the things that you put in boxes for people? Just curious. I don't really my ducks are maybe 2 cents a piece, so it's not a big deal. But some people put significant items in people's boxes. When you guys are putting things in people's boxes, pennies, what are some of the types of items that you may put in a box? Stickers. Okay, so those are all pennies. Those are fine. You don't have to worry about those ever adding up. But what if it was a good friend? A hat? So average value of a hat, depending on the hat, I'm thinking, you say hat, I think baseball cap, maybe 10, 15 bucks. That can add up pretty quick, right? So think about this. When you're putting gifts in somebody's box, you are only allowed as a business to deduct up to $25 of that gift. Previous season, remaining body products, that could add up pretty quick. Earrings, so think about these. 4 pairs of earrings could easily exceed $25, right? And we're looking at how do we show proof of that invest? So this is where you've got to keep track. So this is where it comes down to taxes. You've got to keep in mind, these rules that we have to live by were written for larger businesses. They were written for insurance agencies and travel companies that would regularly give larger gifts to their clients and customers and then try to write them off on their taxes. Unfortunately, those tax rules, the exact same rules apply to us as a smaller business when we're dropping gifts into boxes. So while it doesn't seem like we're comparing apples to apples with them, we still have to follow those rules. So what we need to do is to keep track. If you are giving anything over a trinket gift, so anything over stickers, little ducks, those penny items, actually the IRS considers small branded items, and I'll describe what that is. But if you're giving anything of value, earrings, hats, you need to keep track of who you give it to and how much that you're giving. The Indigo Project, you got that giveaway. Congratulations. So you need to keep a list of some sort, some type of log. If you give one hat that's worth $15, okay, cool. But next time they buy something, if you put another hat in there that's worth another $15, you have that's $30. There's $5 of that you cannot take on your taxes. You're not going to be allowed to deduct that on your taxes. $5 may not seem that big, but when you think about this over the course of a year and the different people that you give things to, it's per customer, yes, $25 per person per year. Now, let's say, what are the things that we can do without worrying about this? So we can approach this 2 ways, because we can say, okay, IRS, this sucks, you're going to make me track all this stuff. Or we can say, how do we do this an easy way and make it easy on ourselves, right? So to do it the easy way, the IRS allows you to do small branded items that are excluded. Face mask, maybe little notepads that have your name on them. The items that are like $2 to $3, small branded things, you probably buy in bulk from Amazon or Temu, something like that. Those you don't need to track, and you can put in as many as you want. So when we're thinking about the gifts that we're giving, we need to be conscious of that. This also includes, it shouldn't be overwhelming. I'm always going to try to tell you the easiest way to do it. So looking for those items you buy in bulk that are worth pennies to a couple of bucks would be the safest route for you. Now, if you are starting to give hats your old product, then you do need to do some tracking, and that can get very, very tedious. So I'm not saying that you have to change what you're doing, just understand what the rules are. Is the IRS probably going to catch you on this? Probably not. However, think about it. The larger your gifts are, the larger your marketing expense is. If that's not comparable to your income on your tax return, that could end up throwing up some red flags, and they may look at it. So understanding the rules, keeping your documentation, and knowing what you can and can't deduct, I would just play it safe, and I would do these small, cheapy trinket items, or not put anything at all in boxes. That's what I would do. Where people get in trouble is when they start giving gifts to, you know, we all have our customers, right? I know every single seller on here has 1, 2, 3 customers that they're like, hey, these people are in all my shows. They are my absolute best customers. They always support me. They always buy from me. And we can be very tempted to be like, let's throw in, you know, an extra vase or something of significant value because these people come to our shows and spend a lot of money, right? I have probably 3 or 4 that I'm like, I would put some nice things in there if I could because they support me so much. Gifts for your mods, exactly. I didn't even think about that, but that's a great point. I love discounts. That's where we start. We don't realize that there's some implication here. And if we do that, you know, a few times throughout the year, and it starts to add up, if you give your mods, you know, a $10 gift card once a month for 12 months, that's $120. Only $25 of that can you technically deduct on your tax return. The rest of it is just kindness of your heart with no tax, you know, no effect on your tax return. It's you can't deduct it. You're just being kind and giving them some of your money. You used to send flat rate boxes, and I'm sure those exceeded $25 when you start adding everything up. The chubby bucks, or not the chubby bucks. Sorry, it wasn't chubby bucks. What did you call them? It was at the end. Chubby box. You called it something at the very end of your show. I forget the name of it. So think about this. Now, that's what chubby box. Okay. So what I'm talking about with the $25 limit is the things that you're putting in boxes. Those are gifts to people that you're giving away, clients or customers. What about the same thing? It's still, if you're giving a gift card to your own website in a box, I'm not talking giveaway on like through Whatnot. We're going to talk about that. That's separate. I am talking about a gift that you're just putting in boxes unbeknownst to them. They open their box and they're surprised. Wow, they sent me something. Gift cards would be included in that. You cannot exceed the $25 without let me rephrase this. You can exceed the $25 all you want. You can only deduct $25 on your tax return as a legitimate business expense. So this is the one that I thought people would be like, wow, I haven't heard about this, but it's a legitimate rule. And while it seems a little crazy to us on Whatnot, it was made to curb a lot of this behavior that was happening in kind of the good old boys, the professional organizations where they were gifting each other, you know, tickets, sporting tickets, and all of this other type of stuff. Now, speaking of sporting tickets, back in the day, that was a thing. These businessmen would give away tickets to golf or to concerts or to movies or, you know, these type of anything that would be considered entertainment. The IRS no longer allows that whatsoever. I haven't heard about people on Whatnot putting like movie tickets in boxes, sporting events tickets, anything like that, but those aren't deductible at all. 0. There is no entertainment deduction allowed when it comes to gifting. So you can do items, but no entertainment stuff. And that's something that a lot of people don't know about either, because it used to be that it was okay a long time ago. So it's still kind of lingering that you hear you can do this. They've also, on another topic, wrap your $25 gift in ones as wrap. Oh my goodness. Yeah, somebody could just send Bree some Super Bowl tickets. We'd be good. So just kind of think about that when you do it. Now, if you are doing a giveaway through Whatnot, you're using Whatnot system, everything is legal, you're following all of the terms of service, and you're putting it in Whatnot, we have a couple of considerations here when it comes to doing something like that. So, if you're doing the giveaway and it is under $2,000, I know you're rolling your eyes. You're like, Tracy, I ain't giving away $2,000. Well, who in the hell are you kidding, right? Let's just go with it. $2,000 is the IRS limit. Increased from $600. It used to be $600. It is now $2,000. If what you're doing through a Whatnot giveaway is less than $200, you can deduct your cost basis of that. So whatever it cost you for that giveaway, you deduct on your taxes as long as you're doing it through Whatnot giveaway system. And the recipient has no taxable income to them. There's nothing the recipient has to do. They just get a free gift. They won it through Whatnot. Wonderful. If by chance, though, what you're giving away in that Whatnot giveaway is over $2,000, you can still deduct your cost basis, but guess what happens then? Your recipient has to pay taxes on the fair market value of that gift. How does the IRS know they have to pay taxes? Because you have to report it. And I know you're like, I ain't giving away $2,000. Have you seen on Whatnot people give away things that are valued of $2,000 or more? I have. Corey Mannix gave away a trip to Aruba. We had the Mr. Beast thing. Okay? It happens. There are very large sellers on here giving away very large giveaways. That's how they get so many people in their room. There was a car, somebody gave a car, so somebody gave a car away. So Jeremy gave away $10,000. There you go. So what happens when, yeah, I know, I wish I could win those. So when somebody on Whatnot gives away through the Whatnot system, you know, they run the giveaway like we all run a giveaway, and the value of that is $2,000 or more. The person giving the item away can deduct their actual cost. Whatever they paid for that, that's their deduction. The person receiving it then must claim on their taxes the fair market value of that item. So if I paid $1,800 for a car that was really worth $2,500 and I gave it away, I get to deduct $1,800 because that's what I paid. But if the fair market value of that car was $2,500, the person receiving it would have to pay taxes on that $2,500. Does anybody remember the whole Oprah thing? I'm aging myself here. Probably 20 years ago, Oprah gave all the audience cars. She was like, reach under your seat and you get tickets. You get a car and you get a car. It's now like this big meme. This is when this kind of exploded. Nobody really knew about this tax law. I mean, there's people out there, but it wasn't kind of general knowledge. Were you watching that show? I just remember it happening. I don't know if I was watching. But this is kind of when this whole tax thing exploded. And people were like, what? I got to pay taxes on these cars? This is ridiculous. And people who couldn't afford the taxes were in big trouble. They were like, that's great, I want a car, but take it back because I can't afford to pay the taxes on it. So and the reason I bring this up is, one, if you ever get to that spot where you're giving away big gifts like this, I want you to know what your obligations are. And two, if you're ever in a show and you win something like that, I want you to know what your tax liability is going to be on that. Now, if you're the person giving it away and you got to let the IRS know what's going on, you know what you need to do? You got to collect that person's social security number, their address and their name. Address and name, you're sending them the gift anyways. You already have that. How willing do you think a giveaway winner is going to be like, you send them their gift and you're like, hey, by the way, DM, I need your social security number. I need you to fill out this tax document so I can send you a 1099 at the end of the year. That giveaway winner is probably not going to be too thrilled with that, right? Yeah. And if they don't supply it, then you have to jump through hoops with the IRS to report it properly, or it's not deductible for you on your tax return. So I'm never going to give giveaways like that. I don't think most of us are. I don't think it's a super popular thing to have happen, but we do know that it does happen. And since we were talking prizes and giveaways, I thought I would put it out there so you guys are at least aware of it and you know that this is something that's occurring. So this happens daily on the price that they have to pay. They do. Anything that you win like this, it's not just Whatnot. Again, these rules were written for the game shows, all of the, everything going on. You got to pay the tax on it. If I give away something won on those spin the Whatnot wheel shows, can you claim the amount spent to spin the wheel on taxes, $25 or less? If you give away, yes, so if you spent money to buy something on Whatnot and it was one of those wheel spins and they sent you the thing and you're like, I don't want this, I'm just giving it as a giveaway in my show, whatever you spent is your cost basis. That doesn't have a $25 limit if you're doing it through the giveaway system. If it's under $2,000, there's no tax implications. You can deduct all of it. If you're putting it in somebody's box, that's when there's that $25 limit that comes into play. I was very young when I watched Oprah too. Just saying. I'm with you. I got you on that one. So I just thought this was pretty interesting. And this actually comes into play. So I work at a global corporation, and we actually quit giving gift cards to our employees as prizes because of these rules. So I run conferences, and frequently we would do like little raffle drawings, or to encourage somebody to talk at a conference, we would give them gift cards, and we had to quit doing that because of these rules. If you give something with your logo, it is good grabs if it's like a very small trinket item. The IRS specifically uses the term here, hold on, I'll go back to it, small branded items, and they give the dollar value of around $4 or less. So if it's something with your logo, maybe an eye mask, an air freshener, a little notepad, those type of things that I would explain is you buy in bulk from Amazon or Temu or something, and you get them, by the big caseload, and you're dropping those in boxes. You don't even have to worry about those. You can give those out all day long. They're excluded, like pens, yeah. So keychains, anything like that. Those are branded small trinket type items. You can give those away all day long and never worry about it. You're fine. You buy 1,000 of them. You take that as an expense on your tax return and put them in as many boxes as you want. So that's one of the smartest ways to do it. If you are really like, hey, I really want to put things in people's boxes, that's probably the easiest, cleanest, smartest way to achieve that. We want to make sure, though, that we are tracking this for if you're giving something over 25 or getting close to it, the hats, the old products, things like that. And what the IRS specifically says that you need to track when we're talking about putting things in people's boxes is, let's see, the date that you gave it away, the date that you put it in the box, a description of the item, your cost of the item, and the fair market value if it differs. So when I talk about cost and fair market value, cost is what you paid. So let's just talk about the person giving hats. So if you're giving a hat away, the cost, whatever that hat cost you, and then the fair market value is what would that hat sell for if you didn't know the person on an open market and you were to sell that hat. If you were to go into Target or any comparable place and you saw a hat just like that at a store, what would it sell for? That's your fair market value. So an arm's length transaction with somebody not related to you. That's how we determine fair market value. And you need to record your cost, the fair market value, your business purpose, and the person's name that you gave it to. You should be recording that anyways. If you are getting anywhere, if you're giving away anything that may exceed that $25, those are the things you should just keep a little log. Keep it. To me, it just seems more hassle than what it's worth. I mean, that's why I won't do it. It's too much time, too much effort. I'm not that gung-ho on doing something like that. It's not complicated. It's just tedious. You gotta track it. So, and all of those expenses can be considered marketing, advertising, however you want to put it. That's kind of gray area. It's up to you for classification. But it's kind of just as important as keeping your receipts for sourcing or buying supplies. It's one of those things. If you don't document it and the IRS comes and asks you about it, that's going to be denied. You're not going to be allowed to deduct it on your tax return. So think about it like that. Part of the reason we document so well is so that if the IRS ever asks us a question, we can prove it and they don't say, nope, that's disallowed. Because what happens is if you do this marketing, say you spend $3,000 in a year on marketing and you don't keep any receipts and you get audited, the IRS will say, nope, none of that is deductible. Now you owe taxes on that $3,000, and because you didn't do it right to begin with, we're going to fine you and charge you a penalty on it and any interest on the money that you should have paid us to begin with. Not documenting could end up costing a lot of money in the future. It gets expensive. The IRS don't play. They want their money there, and they are going to go after every little penny. So, and then of course we get to just the other side of it. So away from the IRS side. So today I bought a huge lot of inventory and paid in cash. How do you document that? Savannah Banana. Anytime you buy something in cash, you should just keep a logbook. Like if you're doing estate sales, flea markets, yard sales, things like that, keep a little logbook and just do a general, the date, a very quick description. You don't have to itemize everything, and the dollar amount spent. And keep that contemporaneously. So keep that on a regular basis, and the IRS will accept that as documentation. So some people carry little receipt books and will actually write themselves a receipt. That's an acceptable method. Some people carry little log books. Maybe you have used the Notes app in your phone. All of those are acceptable ways to do it, as long as you're doing it on a regular basis. So now that doesn't work for places that actually give you receipts. If they give you receipts, you either need the receipt, the bank statement, or the credit card statement. You're going to need one of those three things to prove that you spent it. So now, away from the tax side, write it daily. If you write them, yes, they will. As auditors, I am a trained auditor. That's my profession of many, many years. Did taxes, then I did audit. One of the things we learn, we don't go to audit school, but when we're going in accounting and audit techniques, one of the things we learn is how to spot some records that are done at the last minute, how to spot things that look fake. We're looking for inconsistencies. The IRS knows, and this goes for your mileage too, if you have a logbook and it's all in the same color ink and it all looks like it was written at the same time and it is not like used, like you can tell. Think about your favorite book that you read and how the pages get kind of the dog ears on it and it looks worn. They know if at the very last moment you created that whole book from memory. They know. I buy animals with cash. The auditors looked at my books and knew I wrote them daily. There you go. It's true. They will look and know. Different color ink is the biggest giveaway. How old and worn is the records? They'll look at that. They'll look at the writing style. If you're writing things daily on the go, you're going to have different slants to your writing. It's not all going to look the same. Is there anything they don't want to know? No, they want to know it all. They want every little thing. Look, y'all want to hear about an audit story? I just did an audit today. Let me tell you about my audit story. If you're in the show this morning, you heard me talking a little bit about it. I log miles on a spreadsheet. Yep, you can log miles on a spreadsheet. That's fine. It does not have to be handwritten. A spreadsheet's fine. So I work for a public accounting firm, and because we're auditors in a public accounting firm, we audit public companies, so companies that are traded on the stock exchange. Because of that, we have to be independent. As an auditor, I cannot invest in any company that we may do business with. So we have an independence requirement. We have to attest once a year that we're independent, which means there's a lot of things, stocks in the stock market, a lot of things in our 401ks that we're just not allowed to do when you work for a public company, a public accounting firm. So I got picked for a random audit, a random independence audit, to make sure that I am meeting all of my independence rules that I have to meet. And we had today, I spent the good majority of my day going through every single credit card we own, giving that to my employer, every single bank statement, and they looked at a 3-month period this year. So credit card statements, bank statements, tax returns, W-2s, anything else that associated with your tax return, mortgage stuff, auto loan stuff, anything financial in our lives for me and my husband and my adult dependent children, I had to submit to my employer today because it was part of an independence audit. It sucks. That was for my employer. They go easy on me. You don't want the IRS coming after you because the IRS is not going to be as nice. So that's just a true story. That's what I spent most of my day doing, is gathering receipts. And I got very upset because as much as I talk about documentation, I cannot locate a W-2 this morning to save my life. And I spent a good hour looking for that dang W-2. So trust me when I say it pays to have your things in order, because I spent an hour looking for something that should have been taking me 2 seconds and it did not. So it is crazy. I understand why they do it. It's so that there's no conflict of interest. There's no like insider trading or anything like that going on. And you know that going into this profession. It just sucks when you get picked for it. We know when they do the audits and we're all crossing our fingers like, don't get the email, don't get the email. So I got the email. So, so think about your documentation. We got that. On the other side of any type of thing that you're putting in boxes or the giveaways that you're running, they do affect your profit. So think about that from the side of, it's the full cost of that giveaway that you're deducting out of your profit. Your farm got audited last year. I had the paper, but it is brutal. It really is. And depending how invasive, there's different levels of audit that the IRS does. You may just get like a correspondence audit. They send you a letter says, hey, we got a question about this expense. Can you send us some proof of this? You photocopy it, you send it back. Usually, no big deal, you're fine. That's the easiest kind of audit. But then if they have real questions and you have to go and meet at an IRS office, or they come to if you have an office space, and they start digging in, it can drag on. And if they find one thing, then they're going to start looking at something else and something else and something else. And it gets bad. It can get bad really, really fast. So I can imagine that it was brutal. I have had 3 correspondence audits in my life from the IRS. So over the last, 30 years, 3 times I've had a correspondence audit where they just needed an explanation or some type of documentation on something. Crystal's Vintage Collection, thank you so much for the raid.
Welcome in, Raiders. Glad you can join us on this business and tax discussion.
Crystals, thank you so much for bringing your people over here. Y'all, my name's Tracy. This is Zoe's Treasures. We are talking about the tax implications of giveaways here and things you put in boxes on Whatnot. Crystal, please put in the chat who you are, what you do, what you sell, all the details, when the next show is, anything you want us to know about you so people can click on you and follow. And y'all, personal, I know Crystal, highly recommend. Did you? Well, thank you very much. I hope it was all good stuff. Your uncle did that for the IRS. He went after gangsters. See, now those are the cool IRS people. He said I kept everything, and then so. Look it. This used to be my dream. That there are IRS agents that carry guns and they go after the real bad guys. That used to be. I applied to work at the IRS so many times. It's hard to get a government job. I applied so many times and I never got in, but that was my dream for a long time. I wanted to be an IRS agent that carried the gun and went after the bad guys. I ended up being an auditor instead. Rolling out reading red chat. He did your taxes for you? Yeah. There's some, I know people think taxes and stuff that are boring. There's some interesting things about taxes. Taxes is what took down Al Capone. You know Al Capone, the big mob guy? Taxes is what did him in. They didn't get him on murder. They didn't get him on corruption. They got him on tax evasion. Just saying. They could be pretty exciting. So, I want you guys to think about the expense too of giveaways or putting things in boxes. Not just the tax implications, not just who pays the tax, who's liable, all that stuff. But if you think a $10 giveaway, think about a $10 giveaway item, say maybe $6 for shipping and 10 minutes of extra packing. At a minimum, you're out $16, not counting your time or the shipping materials. These things add up really quickly for you as a business. So just make sure you're considering that. I'm not going into if they're good or bad. Just, I want people to think about that. I want you as an accountant, as a CEO of your business, to think about these things that we give away. They add up. They cost money and they detract from your profit. I was born in the wrong era. I really was. I needed to wear one of those long jackets and hide stuff in my jacket and, I don't know, Inspector Gadget IRS kind of person. That would have been pretty cool. So, and then the other side of it is not only the cost of the giveaways to you or whatever you're putting in boxes or giving away, but the return on investment. So let's think about that. Let's put taxes aside. Are your giveaways, what you're doing as a giveaway, achieving their purpose? Increasing attendance, increasing buyer activity, increasing your sell-through rate, and making people come back to your show. So make sure you're considering the return on that investment also when you're doing these things. There's everything about Crystal right there, y'all. I do recommend that you go follow her. Not only does she sell really great vintage stuff, she does vintage estate, mainly vintage, but she also teaches CSV. So if you are one of the people that uploads everything and pre-lists, she'll teach you how to do it a lot faster than putting things in one at a time. So that's really all I had to say on the thing. We could talk about things that ways to avoid this. Right up above you, East Coast Island, is Crystal's Vintage Collection. There it is, right there. She said me. She does a CSV show at least once a week. and she will teach you. She's very patient, and she walks you through and shows you on the computer how to do everything. I've heard mixed opinions on this site. Since I run my reselling business from out of my house, internet included mortgage payments are not a write-off. Internet and electricity are. If you're renting, your rent could be part of that. So what you're talking about is your home office expense. There's two different ways to deduct a home office expense. So you can do an actual, which means you take all of those actual expenses, the portion of the electricity, the portion of the internet, if you have a bathroom as part of your home office, the portion of the water bill, if you pay a gas bill, the portion of that, and the portion of your rent, not your mortgage. Your mortgage is claimed elsewhere. Then you can take actual expenses based on the square footage that you use. Or the easy way to do it, the IRS calls it the simplified version, simplified method to take the home office. They allow you to deduct up to 300 square feet automatically at $5 a square foot. That means you don't have to calculate everything else. All you need to know is the square footage of your space. You just need to know the square footage of your space, and you get $5 per square foot. That is 9 out of 10 times far more effective and easier for people than trying to take all those expenses. I have always done the simplified version because some of this, if you do actual, maybe you'll get $10, $15, $20 more of a write-off than you do simplified. But is that $10, $15, $20 worth all the time put in to gather all that and do all the math and keep all those receipts? To me, it's not. Now, it depends on the size of the space. The simplified method gives you 300 square feet. I have almost 1,200 square feet down here. So I may change now that I've expanded my business. I may change how I'm doing that because I have a lot bigger area than 300. So you got to balance it out and see what's worth it. If you have a 10 by 12 room, what's that? 120 square feet. So if you have a bedroom, using the simplified is probably the best way to go. The mortgage comes off of your the mortgage comes off of not the payment but the taxes on that on your Schedule A. So you're already deducting that on a personal side, so you cannot take it again on the business side. That's why that's not allowed. You can't double dip. But if you rent, there's no write-off on the rent on your Schedule A, so that's why you're allowed to do it on your Schedule C, on your business side. Yep, you can do a bedroom and a storage unit, whatever legitimate space that you use primarily and exclusively for the use of that business, you can write off. So it can be, if you rent a storage unit, it's just the rent of the, like whatever you pay for the rent. But if you have like a shed in your backyard, could be, and it's all business, that's where you store all your stuff, that can be written off. If you have an area in your garage where you store all your boxes and your shipping supplies, plus you have a bedroom, as long as it's used for your business, you can add it all together. The other thing that people forget, there it is, yep, go get hubby to get you a shed. The other thing that people either forget or don't think about, so we have right here is a whole bedroom. This used to be our guest room, is now our studio. I just bought paint. I'm going to change the color of this wall behind me because I don't like it. Even though my husband doesn't want me to, I'm going to do it anyways, hopefully this weekend. So I'm changing that. I just had to pay $60 for a gallon of paint. Because the paint is in a home office area, I can add that paint to, if I'm doing actual expenses, that paint now becomes deductible. So things like that too, if it's within the confined space of your home office. So when you add it together, is it up to? Yes. So when you add all that space together, and say it comes to 280 square feet, 280 is what you take. If it comes to 305, then you're only allowed up to 300 on the simplified version of the home office expense. If you have 305 square feet, you can take the actual, but that's where I'm saying that those extra 5 feet may not give you enough. The return on what you're getting for those extra 5 feet and the time it takes to accumulate all those documentation is not worth it. Just go with the 300. This is where a tax person can really help you out. They'll look at all these different options that you have and say, no, this is really what you should be doing. So, only if you use it to source. What do you mean only if you use it to source? Oh, okay, I didn't read his motorcycle. Ugh. Yep, you could if you did drive it there and back. I wish I can take on new clients. This may be a future endeavor. So hopefully if I ever go that way, y'all will keep me in mind. I will answer that. But right now, because of the same rules I was talking about, the independence rules for my job, I am not allowed to actually do any type of accounting work for profit. So I am not allowed to take tax clients or do consulting. So I can never offer like one-on-ones. It's just a conflict of interest with my day job. So a vehicle payment is a write-off. Let's talk about that. The rules for vehicles are a little bit different. If you are, again, it goes back to there's two ways on the vehicle. You can take actual or you can take the simplify. You can take just pure mileage. When you're leasing a vehicle, there are some specific write-offs for short-term leases. We're talking about your car broke and you had to lease a vehicle for 3 or 4 months while your car was in the shop, and that's a business vehicle. You can write that off. The other actual expenses that you're taking for a vehicle would be dependent on the business use of it. So if you're going actual, you're accumulating all of your gas receipts, all of your repair receipts, all of the price you're paying for that vehicle, and you're taking a small portion of it based on the business use of it. Now, if it's 100% a business vehicle, yes, there's no question about it. If you buy a vehicle and it is registered in your business name, it is a business vehicle, completely tax deductible. The other side of that, the simplified version, which makes it easier for us as small businesses, is you just get mileage. They just increased it halfway through this year. I forget, they just added another like 5 cents to it. And then you just take mileage. You keep your mileage log and you deduct mileage. The amount that they give you for mileage covers the gas, the repairs, and all the other expenses you would normally have in it. 9 out of 10 times, telling you, I have done this math so many times in my career, the majority of the time, doing your mileage is going to give you a better return than trying to do the actual on a split use vehicle when you're using it for business and personal use. Your mileage is almost always 76 cents, but did it just go? It just went up. Maybe it was 72. They just changed mileage. I talked about this. I don't have my notes in front of me. Look on July 1st. They just passed a law and changed the mileage. Okay, and it says from July 1st to December. What was it before that? 72 and a half? Okay, so for this year, see, look, I remembered the numbers. For this year, 2026, from January 1st through the end of June, you were allowed 72 and a half cents per mile. That's a lot. Think about how many miles you drive. As of July 1st, the IRS made a historic move and they increased the mileage rate from July 1st to the end of this year to 76 cents. They have only done this one other time in history, changed a mileage rate mid-year, and that was back early 2000s. So this isn't something they do very often, and it's going to make things a little more complicated this year because you have to use the 72.5 cents for the first 6 months and the 76 cent rate for the second 6 months. So this year is going to be a little bit different when it comes to tax time doing your mileage. But think about that. 76 cents a mile, that's a lot of money. It depends, how much you drive and where you go. I know for me, my mileage is adding up to thousands of dollars a year. Thousands. I'm talking $5,000, $6,000, $7,000 easy a year. Yes, driving to and from the post office, sourcing trips, not driving to the grocery store, nothing that would be personal, not commuting. If you have a booth and that booth is considered your primary workspace, that's a commute. You can't do a commute. Be smart about this, you guys. Look, I'm not telling you how to cheat the system. I'm just telling you how to be smart about this. If I live here and my post office is here, okay, and I drive to my post office, that's to drop off my whatnot packages, that's fully deductible. If I detour and go over here to the grocery store and then to the post office, my trip from home to the grocery store is not deductible. But if my grocery store just happens to be along my route, guess what? Now it's deductible because it's along the same route that I normally would take. So plan your errands. You don't have to go crazy with it, but taking 10 seconds to think about the route you take could maximize your mileage deductions. Think about when you're going to an antique store, what's between here and the antique store? Do you need to pick up toilet paper? Do you need to do something else that's personal and it's on the way? You could just, if you're just pulling into a parking lot, that the IRS isn't going to disclose you for that. So, and I'm not saying do anything crazy. I mean, we're talking 76 cents. Don't get yourself in trouble over 76 cents. But think about it being smart, just planning your routes. So, and all of this adds up really quick, but you got to keep those records. We go back to the documentation. I think every Friday I harp on documentation. It's the biggest key to all of this. Because if I asked you right now, what day are we? We're July 31st. What did you guys have for breakfast on January 4th this year? Or how many miles did you guys drive on January 8th? Probably coffee. Okay, how many miles did you drive that day? Nobody can answer that question, right? You won't remember. Every time you don't document is money you're throwing away. Just think about it like that. Every time you don't write it down is money you're saying, I'd rather pay taxes on that. That's okay. I'd rather pay the government some more money. That's literally the decision we're making when we don't document, is we're deciding that instead of taking 2 seconds to document, we'd rather pay the IRS more money. How do I recommend documenting your mileage in particular? Any way that you're going to do it on a regular basis. Pencil and paper in your car, an app on your phone. There are a ton of apps. Somebody was saying that their insurance actually has an app that logs all their mileage. QuickBooks has a mileage app built into it. I know if you go on your iPhone or go on whatever phone and look in the App Store and type mileage app, there's probably going to be 50 million choices that come up. Any way that you will do it on a regular basis is going to be the best way. Little over or under GPS mileage is what they looked at for our farm. Yeah, they get down, they'll get into the nitty gritty when you get audited. So just be honest, keep records and be honest. That's all you have to do. If you're keeping your records and you're being honest, you have zero to worry about. Nothing to worry about. And again, I'm going to go back to the same concept, the same point that I make all the time. You're not only keeping records because you need to do taxes, you're keeping records as a good business owner to know where you've been and where you're going. It is part of your decision-making process. How do you know on a month-to-month basis if you're making a profit or not if you're not keeping your records? So we're doing it for ourselves. Then we have it all together at the end of the year. Now, when it comes to mileage and home office, this is where it kind of differs. So your mileage and your home office are kind of those things that help you separate your profit from your taxable income. Because while you're keeping a mileage log, we're not really recording that as an expense in our books. We're not putting that in our accounting records. We're not adding up, oh, the month of January, I drove this many miles at 76 cents a mile, so I'm going to make an accounting entry in my books. We don't do that. We keep mileage purely for the IRS. So then, come tax time, you're going to look at 2026 and you're going to say, oh, this was my net profit. The beauty of this then, because you kept these records and the home office stuff, is you've got, let's just say you do your books all year long, you're doing your accounting, you end the year and you have a $50,000 profit. You're like, okay, I'm probably going to be paying a little bit of a tax bill here. Well, then from that $50,000, then you do your Schedule C, that's your net profit, and you start putting these other items on there. Your mileage, for me, that's going to knock off $7,000 of that instantly before I even bat an eye. Your home office, there's another $1,500 coming off of that. Some of these other expenses that are more of a tax expense and they are a book expense, and that's where you start driving down that number of your taxable, the net profit for taxes, and you pay less that way. So that's kind of the beauty of it. I'm trying to keep it high level so we're not getting too much into the weeds here, but that's how you have a difference between how much money you actually made and how much money you're actually taxed on. Everything down. Every morning I document the day before. Yeah, that's a perfect figure out what your habit is. I love that. In the morning while you're drinking your coffee, I sit down once a week and do my bookkeeping. Figure out what works for you. If it's not documented, it didn't happen. 100%. They do. I would have to go and look exactly what the record retention is. I want to say it's 3 to 5 years, but if the IRS finds something in the 3 to 5 years, they can go back to either 7 or 10. I'd have to look up the exact numbers, but it's somewhere in there where it's on a regular audit, they're allowed to ask, I think it's 3 to 5. I may be off a tad bit. And then if they find something, they're allowed to go back then again even further. So another reason to keep good records so they don't keep digging it, going back and back and back. And when you're talking about your records, you guys, if you do this electronically, Crystal's Vintage Collection actually gave this idea one of her shows, or in one of mine, I don't know, we were talking or something, but it was her idea. She's like, I email receipts to myself. Are you looking it up? Is it 3 years? 3 to 6 years is what they're allowed to go back to, and then they can go back further if they find something. She emails her stuff to herself. She'll take pictures. Anything comes in the email receipts, and she just keeps it all in a folder in her email. She has electronic records. It's nice and simple. She has her regular bookkeeping, however she does that. But if she needs a receipt, she's not like me spending an hour, over an hour looking for something. It's all right there in an inbox. So that's a good tip to do. There's no right or wrong way to keep the records as long as you're keeping them. I don't file my receipts. My receipts literally go in a box. I document them in my Excel, and then they all go in a box. I don't take the time to organize them in any way. So, great, and it's in day and month order. There, you see? So, whatever system you get to, you just need to be able to go back and find it if necessary. I was telling my husband today, though, I need a week off just to organize my life, like my outside of the business life. We moved here to Pennsylvania 3 years ago, almost 4, and he got sick immediately, and I kind of took over and I started a business, and I just feel that I got flooded with so much paperwork that I have boxes and boxes, and I need like a week just to go through, shred what needs to be shredded, and just kind of organize stuff. I've got spreadsheets. I'm great on the computer side, but the paper, I'm a mess. I'm a hot mess when it comes to that. You need more than a week. Exactly. My day, that's how I am. Anytime I'm not working my full-time job, I'm doing whatnot or, toting a teenager around or trying to do something with her. So, yeah. Or maybe cleaning the house. That comes at the bottom. So, there you go. Here, look at my husband. Look how good he is. Period of limitations that apply to income tax returns. Keep records for 3 years. Keep records for 3 years from the date you filed your original return or 2 years from the date you paid the tax. So if you did an extension, you may need to keep it longer. Keep records for 7 years if you file a claim for a loss from worthless securities or bad debt. 6 years if you do not report income that you should report. Okay. Keep records indefinitely if you do not file a return. Indefinitely. Okay, look it. Here you go. This is a good tip, you guys. Number 6. Don't miss this. This is how crazy the IRS can be. Number 6. Keep records keep records indefinitely if you file a fraudulent return. Highly, 10 out of 10 do not recommend filing fraudulent returns. Keep employment tax records for 4 years. So there you go. Quick Google search will get you the answers. You got a cleaning service. I would love somebody to come and cook for me. I would be happy. I can do the toilets. I can do the bathtub. The sweeping maybe needs to be done. Laundry may get a little behind, but I would love somebody to cook meals for me. That's what I would pay for. Oh, you are spoiled. Right now, my extra money from the business is going into shippers. You guys, tomorrow I have a new shipper starting. So totally off topic. We're just gabbing now, but so my daughter's been shipping. She's been doing a great job, but she is now going back to school and cheer, so she can only work Saturdays. So my son is coming tomorrow to for his first training day. So my son will be joining my shipping team now. Thank you for joining through a shared link. That's pretty cool. So yeah, we are expanding our business here, and now we're going to have 2 shippers. So he'll be here learning my system. And I'm sure he is a young, he's 22? He will tell me how I need to fix it. I know I'm already going to hear his opinion on how I need to fix my system. And I'm going to have to be like, I'm your mom, listen to me. Which you can't do with a regular employee, but you can pull the mom card when you hire your kids. So that works. So that would be amazing if AI can clean our houses. I would be with you totally for that. I think the closest we get is what do they call the Roombas? I need one of them too, but they're expensive. I price one of those. They're way too much. All right. So avoid mistakes. So what can we do? Might have a good idea. What's your good idea? Tell me. I want to know the good idea. While you're typing your good idea, how do we just making sure that we're doing everything cool with our giveaways? Define your purpose before you do the giveaway. Make sure we know what we're doing. Oh, my son might have a good idea. He may. He's a smart kid. Whether I listen? Sometimes. No, you cannot. Now, if you have a warehouse or like if you have a separate business location, all the cleaning is 100% deductible. If they are cleaning if you have a bedroom that you use for the business, you may be able to take a small portion of that cleaner if they're actually cleaning in there, vacuuming, dusting, doing that stuff in your studio space. But it would be a small portion in percentage of the overall square footage of the home. And that's only if you take actual expenses. If you take the simplified, that $5 is considered to cover all the expenses associated with that office space. So not the whole thing, but maybe a little piece if you do actual. Know the value of your items. So just remember, if you guys are just coming in, we talked about when gifts are taxable. So quick rule, I'm just going to recap for the people that may just be coming in. Yep, the utilities. So if you're taking actual expense on your home office, it's any utilities, any expenses that go into that home office, you can take a portion of, percentage of. So if you're using 10% of the square footage of your home for your home office, 10% of those utilities can be part of that. But again, compare what the actual to that simplified version is. A lot of times that simplified version is going to just save you time and effort and be just as beneficial to you. It really comes down to actually how much space you're using is really what it comes down to, and how much it's costing you to use that space. So if you're just coming in, one of the things that we mentioned that was kind of unique and different that a lot of people don't know is that when you're putting gifts in boxes, thank you for your purchase from the bin. When you're putting gifts in boxes, you're only allowed to deduct $25 per person per year. So keep that in mind when you're putting gifts in boxes. And we talked about those huge giveaways on Whatnot, $2,000 and over, that the person receiving the giveaway has to pay taxes on that. So that's something just to keep in mind, and make sure you're measuring the impact. Are the things you're putting in boxes, the giveaways you're doing, are they worth the money you're spending? Bottom line, that's something we should be asking on everything we do, not just giveaways. Is the money I'm spending for whatever business purpose worth it? Am I getting the return on it? Is it doing the purpose it should? Can I save money? Should I be spending more? Am I buying the right kind of boxes? Should I buy better boxes? Could I buy cheaper boxes? Oh, okay. $500 is okay. It's $2,000 that you have to be careful of. So the limit used to be $600, and the IRS has increased that to $2,000. So you can win up to $2,000 from one person and not worry about it. But we talked about, we've seen, everybody kind of pitched in. We've seen cars, trips, gold, all over $2,000. Those are three things for sure that I'm 100% sure has been given away on here, not counting all that Mr. Beast stuff that they gave away. So all that stuff is taxable. And a lot of people don't realize it, and that's where they start getting in trouble. So, and if you don't track it from the person who's doing it, they can't deduct it. Yes, that was a whole controversy. That was like the 2026 controversy on Whatnot. So that's really all I have. I don't have a whole lot more for you guys. If you guys have any questions, we'll answer some questions. If not, we will call it a night. We're usually about an hour on Friday nights. We usually don't go too much longer. It got them the attention. It did. I think there's just so much. You can rewatch on YouTube. Absolutely. Same names, always treasures on YouTube. You guys, if you didn't hear this morning when I was talking about it, I'm painting it. I don't have the paint swatch with me. I'm doing like a green, like that country green, a really like softer green color. I'm pretty excited about it. The problem is my husband's really mad because he has all his equipment over here, and to pull it out from the wall so I can get in there and paint it is going to be a pain in the butt. And I have like my show in the morning. I have to do it after my show in the morning, but before our podcast on Sunday night. Yes, my love. Forgotten Memories. He is welcome. Thank you for recognizing that. Noelle has been helping out Green 13 and What Liz Likes on streaming for YouTube. You just applied for it? Were you talking to Forgotten Memories? No. Okay, you just applied to do streaming too. That's awesome. You know what, you guys? I don't like the fact that Whatnot for the streaming thing. Oh, that's cool. Absolutely do it. I think it's great for people to be able to go back and watch. I think it kind of sucks that Whatnot offers no other way. They took away our replays. Okay. I'm going to read that. Thank you. He's telling me to read something that I missed. I think it kind of sucks that Whatnot took away the replays, but at least we can go to YouTube and do it. I hate having people when they have to buy something to rewatch. I understand why sellers do that because they have no other option besides streaming, and a lot of people aren't set up for streaming. So I think it's great that you're doing it. Okay, VT Farm Girl, they're giving away a Porsche tomorrow, so look out for those tags. Who's giving away a Porsche? Because you know we all need a Porsche. Whatnot's giving away a Porsche, but like their channel, like is it a specific streamer? Like where do we go to win? We are in PA. Upcycle Life, are you in PA? Whatnot, but like, well, I guess I'll find Whatnot channel. Have you purchased, I don't know, we've sold almost 100. Have you purchased a PA meetup ticket? You guys, I don't know how many tickets we had, 11 at the start of the show. Maybe we're still at, yeah, we have 11 tickets. Only 11 left. So, did your friend tell you about you? Well, then that's probably a good friend. Very smart friend, just saying. There's our PA meetup tickets. If you're in PA, we're doing a meetup October 3rd. We already have over 100 people sold tickets to come and see us. That's probably by like, they're probably going to do freight. They're probably just going to get one of those big car carriers. There's no way they can ship it. Ophelia's Finds is coming. We have people coming from as far away as California, Maine, like Georgia, Florida. Like they're coming from all over to Pennsylvania. So it's going to be an awesome meetup, you guys. I'm not doing like, this isn't a FOMO. This isn't a trick. Like we have 11 tickets. That's it. Jeremy at Green 13 has a few. Everybody can stay with me. Okay. Is Southern Charms in here? Sorry, I'm going to have to break this to you. We've already promised Southern Charm and I Love Discounts that they can stay with us. We only have one guest bedroom, but we do have our daughter's room. So Southern Charm, we have Zoe's room for you and Brittany, and I Love Discounts is going to get the guest bedroom because we have a queen bed in there. And other than that, people are going to have to be busting out air mattresses. That's all I'm saying. It's in Harrisburg, 11 miles from the train station. I think just north of downtown, if I get my directions right. No, Southern Charm, we have space here. We got it all worked out. You have a camper in York, PA. There you go. You should rent out the camper. We got a lot of people coming. They may need someplace.
Forgotten Memories. That's what I was going to say. Everybody's going to stay with her. I'm getting a hotel.
So it's going to be there. It's West Hanover Parks and Recreation. It's actually an old firehouse that we're going to be in, 9 to 3. So 11 tickets left, you guys. I was saying this morning how blown away I am that the tickets sold so fast. Look, I'm just going to brag on myself a little bit. Not really brag on myself. I'm bragging on the caliber of people that we have speaking. This is a pretty darn big meetup. I know there's been a lot of meetups going on. We're going to have 125 people there, not counting the speakers and the helpers that are coming to help set up and do things. That's a freaking good sized meetup. The Whatnot Seller Summit was 500 people. We're nowhere near that, but we've got like a fifth of that, 125 people. I am like over the moon happy that we got this many people.
Thank you, Forgotten Memories. But I was going to say, Mary, who needs to sleep when you have such a great crowd coming in? No, let's go. Burn the candle both ends.
Yeah, it's going to be cool. So, all right, we're going to go raid somebody. It's his job to pick the raids. So if it's an awful raid, blame it on my husband. That's all I'm saying. Blame it on him. Thank you guys for hanging out with me and talking taxes tonight. Come back tomorrow morning if you like Warm Embrace, Woods, Metals. And then Monday, I do 7 a.m. We do chat and sell. I'm trying something new on Monday. We're doing a theme. So the theme is red on Monday. So everything I sell is going to be red. I got a surprise coming on Monday, so you don't want to miss that. All right, who are we raiding to?
Surprise, surprise.
Surprise raid. I don't know. Where are we going? Thank you all for being here. Inga.